Welcome to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. Whether you're watching us live at sktrading.live or listening on your favorite podcast platform, we've got you covered. Subscribe, join the community, and get ready to dive into real talk and real market insights. Let's get started.
Hi, everyone. I'm Stephen Clayton, and welcome to the Bull, the Bear, and the Ugly. Wow, what a day for a Friday. I'm actually doing this right now around 2:11 in the afternoon because I have to head up to New York and catch a flight. So I didn't want to miss the Bull, the Bear, and the Ugly, my podcast, to give to each and every one of you here. What happened here today at around 10:30 this morning, the Qs reversed to sell at 10 o'clock. The Qs reversed to sell on the 60-minute time frame, correlating with the 15. We're in a sell disconnect. And then right around I would say around the 1 o'clock time period, the 60-minute time frames reversed to sell. So did the Russell. And right now we're looking for the 15-minute time frames to get this overbought condition. S&P futures rallied 40 handles off the low, 40 points off the low. And I will tell you that it is the end of the month, so anything can happen here. We have a little bet going here amongst the community. The last 2 days, I thought the S&Ps were going to be on the over 5,900. Today, I said the under. And, well, at one point, it was looking good, but I just rallied 40 handles. Right now, they're trading 58.95. But, again, the bottom line here is what's going on. China and the United States are not coming to any negotiations regarding these tariffs. Market didn't like that. Trump said he's going to have to really step it up with the tariffs. And more or less, the bottom line is that the markets didn't like that, there's still a trade war going on with these tariffs, and China didn't really want to budge. And Trump said, I'm tired of being Mr. Nice Guy. And I think he's going to put some more tariffs and stricter restrictions on China. So we're going to hear this rally here is all the end of the month right now. It's nothing that is anything part of what's going on. Again, there are big gaps below the market, and more or less the gaps below the market take us all the way down to the 56.78 on the S&P futures. So we're about 200 points, a little over 200 points from there. We're also looking at the Russell here, really not acting that well here compared to the overall markets. Jamie Dimon came out and said that he thinks that the markets are headed for a big downturn. He just did a big interview on CNBC. This is what my friend relayed back to me. I didn't see he sent me the interview, so I'll watch it. But overall, some really great patterns here today. Netflix is up 13. Don't ask me why. Trading about the 111.97, 1,197. Again, what we saw here today, a lot of the 30-minute time frames reverse to sell. You got bear flags setting up in Apple, 30-minute bear flags setting up in Microsoft. A lot of the time frames, Tesla reversed to sell on the 30 and 60-minute time frames. So what we're seeing here now is most likely the highs are in for the day. We're looking for the markets to get a pullback. And I think overall, these 15-minute time frames are going to head lower here. However, again, like I said, it's the end of the month, and who knows if they're going to goose them or if they're going to caboose them, right? All right. Avago reversed to sell on the 30 and 60-minute time frame. NVIDIA, look at this NVIDIA pattern. NVIDIA, this is Tesla here. Tesla, major bear flag here. So this is a really great short here in Tesla. Right here, Tesla, you can see here is getting overbought into these negative MACDs here, and you can see here we should get a drop because this is the first bounce on the 15 after the 60 and the 30 reversed to sell. This is a monster short right here on NVIDIA. We called this really great short right here in NVIDIA. You can see the 15-minute time frame. The MACDs are negative. The ADXs are rising. Really great short here. And you can see the big selling pressure. The 30 and the 60-minute time frame reversed to sell. And this is the first bounce on the 15. Got right up in here. And NVIDIA, this is the first bounce on the 15 at 145, 134.78. Dropped about $1. And you can see this is the beautiful pattern right here. This is the first bounce on the 15-minute time frame after the 30 and the 60-minute time, the 60-minute reverse to sell correlating with the 30 and the 15-minute time frame. You can see here the markets right here. Okay, at got up to 137.45, and you can see the drop here on Nvidia dropped about $2. What more or less what's happening here is that you see the rotation out. Nvidia is negative on the 30 and the 60-minute time frame. The Qs are negative on the 30 and 60. The spiders were close to reversing. The Russell. So normally when you have two of the four ETFs like the Russell and the Qs reversing, it's just a matter of time before the diamonds and the spiders reverse sell on the 60-minute time frame. This tariff news is not good, but I will tell you in overall what we're looking for. Again, what I'm looking for is the markets to start declining here in the next several weeks. I do believe those gaps below the market are going to get filled. And I do think that the 4,800 level, 4,832 on that Sunday night, 4,890, 4,832, whatever number you want to pick, I think the lows are in. Even if we do get a push down, I think it's going to be a higher low. But more or less, I think what's going to happen is, and then I think we're going to base and then push higher. From what my friends telling me, Jamie Dimons thinks the 10-year bond could actually go to 6%. If that happens, forget it. Forget about the market. You're going to 4,200 if that happens. If Jamie Dimon, if I didn't see the interview, but that's what my friend told me that he kind of said in the interview with CNBC. But if that happens, it's all over. The PE ratios are still very high. I think there's a lot of complacency still here. I don't see anything really that great yet here for the market. Technically, I told you the weeklies have a very negative pattern on the weeklies on the spiders here. I do not like this pattern at all on the weekly. Monster bear flag here on the spiders. Oh, what a short up there at 97 on the S&P. And you can see here, this is a very negative pattern here. And look at this gap right here. This gap right here on the spiders comes in at the 556, 564.34. That's a significant number here. And I got to tell you that this is something that I will say that is more or less this gap should get filled here. This gap should get filled. So with that, I will tell you that overall, the markets right now are they're trying to rally here. They just rallied 45 handles off the low, and S&P and NASDAQ still down. However, the most important thing is the news with the tariffs. The tariffs news really play a big role here in the overall markets and the way the markets are going. The president's talking right now. The S&Ps are pushing right back up here. Good Lord. And they just rallied. Look at this, 50 handles off the low. All right. All right. So when I get back, again, this is a Friday edition. This is not normally what I normally do, but I have to leave and get to the airport. Again, I just wanted to be here today because I don't like missing a day for the podcast. When I get back, I'll tell you what I expect for Monday. Okay, so for Monday, there's no 8:30 number. We have a ISM number at 10, and we have construction spending at 10. And then obviously right now what we're looking at is a big rally, 50 handles off the low because of this end of the month. That's all this really is. It's just a markup here. The Qs are still negative on the 30 and 60-minute time frame. I do expect that after this, I do think we start heading lower. This is just a markup for the end of the month. It started a little early here. Overall, I will tell you that short term, I'm bearish here. If you look at the weekly, like I wanted to show you here, the weekly is overbought here. I like to see them pull in, fill these gaps. I like to see the oscillator here, indicator 3, get somewhat oversold. But overall, I think the most important thing is that that right now, I think that you should be on. If it was me, I'd be on the sidelines, and I'd be looking for lower prices, especially when that first gap gets filled. And then we have gaps going all the way down to 53.40 and 51.50 on the S&Ps. Like I said, I don't think that we're going to make new lows this year. For Monday, the spiders are still bullish on the 60-minute time frame. We have to watch them here. You still have negative divergences here on the MACDs on the 30 and 60-minute time frames. I don't like this rally. However, again, what I'm expecting is if we do get any overbought conditions on Monday into these negative MACDs, I would be looking to short them and look for a lot lower prices. All right. When I get back, I just want to tell you the importance of using risk management when you're trading. It's so important. I've seen so many people that are consistent, they're making their 500, 800, 1,000, 500, 800, 1,000. Okay. And then all of a sudden, boom, they lose like $3,000, $4,000, $5,000. And that's not being consistent. If your goal is to make $500 to $1,000 and then you're up, you can't say, well, I made $1,000 on a Monday, $1,000 on a Tuesday, $1,000 on a Wednesday. Well, you know what? I'll give it all back on Thursday. It doesn't really work that way. It doesn't work that way. And the most important thing that I have to say, honestly, is that when you're trading the markets, it's really about understanding the importance of being consistent. Risk management. You can't. Today, the president talked something about tariffs. People were in certain stocks. You have to put your stop orders in. Boom, you would have been out. Preservation of capital. You would have lost a little bit, but then made it all back on the trade. On the deep oversold conditions. But the point of the matter is, you really need to have risk management. Without risk management, you got to be. You're not bigger than the market. You can't buy something and watch it go down $4, $5, $6, and then decide to stop yourself out. Please, I'm asking you, this is really important. Risk management is everything. Using your stop orders, being able to have preservation of capital. Nobody likes to take a loss. I get that. However, the importance of all this is one thing. Be consistent, and most important, when you have your stops in place, stop market, boom, if news comes out, next trade, at least you don't have to have a gigantic loss that you're looking at, right? Again, because you're not bigger than the market. Out, boom, there's always another trade to come back, and then other trades to hopefully make it back in the future. However, please, I'm asking you to really learn to use stops. It's risk management, it's being prudent, and again, it's preservation of capital for your sake. All right. With that being said, thank you for joining me here today on The Bull, the Bear, and the Ugly. I'm Stephen Kalajian. Please subscribe to my YouTube channel. Please leave a comment. Please join my community of traders from all around the world at sktrading.live. Please follow me on social media at official Stephen Kalajian on X, Instagram, and TikTok. I also give out my cell phone number if you're interested in contacting me. A lot of people leave comments, and you can text me at 914-500-7484. God bless you. Have a wonderful, great weekend. Be healthy and safe. And most of all, God bless the United States of America. Be well, everybody.
Thanks for tuning in to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. If you enjoyed today's episode, be sure to subscribe at sktrading.live or on your favorite podcast platform. We'd love for you to rate, review, and join our community for more real talk and market insights. Until next time, keep trading and stay sharp.